Let me know in the chats. You guys good on Euro USD? YouTube, how we doing this morning? Did we just get on YouTube? There is no way. Yo, can somebody in the chat let me know if we're live on YouTube? I don't know if it's my internet connection or what's going on here. He said, you live, my boy. You live, you live. All right, I appreciate y'all. He said, you were live on YouTube like a minute ago. Damn, all right. Sorry about that, y'all. I really thought we were on this whole time. And one last thing I forgot to add is the live transcripts. Check, copy, copy, copy. Live transcript. Do I have subtitles? Do I have subtitles? Check. All right, now I have live subtitles. I know y'all are jealous. All right, and pretty aggressive moves on indices. Guys, I don't know how deep of a pullback we're going to get, but there's only two zones here that I'm watching. Where's my negative extension? There it is. So we're sitting at the negative extension level right now, negative 61%. This is one of these all-time textbook trades where you have a drop and then the market comes back to the 61% retest and goes all the way down to the negative 61 extension. Do we have to pull back from here? Honestly, not really. It could continue to drop on itself, but a pullback to this 10,600 level, I think that would be ideal. Just back to the most recent extension, and then we can continue to short to the next zone. 10,300 target for NAS 100. So the signals that were called, EuroCAD's still moving to the upside. This candle looks really, really good on the daily. I'm looking at this on the 4-hour. Plenty of room to build. So if you guys have the Enigma app, by the way, guys, if you're watching this on YouTube, Roy Dunya, co-founder, Chart Addicts. This stream is brought to you guys by TradingView, the #1 charting platform in the world for traders. If you're interested in free signals, head over to enigmafx.app, enigmafx.app, and start your 30-day free trial to get signals like this EuroCAD trade and this EuroChef. And this EuroChef trade, which are both running in profits. If you guys have the app, you guys are definitely making profits. And really, it only takes 2 of these trades to pay for the app. And you get a 30-day free trial. So enigmafx.app, do yourself a favor. Go ahead and grab that today. So YouTube, if you guys missed it, I'm going to run through the pairs one more time just so everybody's on the same page. Let's get through NASDAQ first. NASDAQ 100, top 100 tech stocks in the economy. We've had CPI news drop. The year over year came out just slightly higher than expected, nothing too intense, but the monthly numbers for September came out twice as high as forecasted. So they're expecting a 20 basis point rise in the CPI numbers, which is the price of goods in the economy. We ended up getting a 40 basis point move, pretty aggressive, which means that despite the efforts for the Federal Reserve to tighten the monetary policy and to try to take money out of the economy, prices are still rising at a rapid pace, which means that the Fed's going to have to get more aggressive. We're headed into a recession sooner than we thought, and the recession may last a little bit longer than most people expect, at least until the headline CPI numbers start to come back down. Unemployment claims came right on the target from the forecast. 225,000 new individuals filed for unemployment insurance in the month of September. Looks like a lot, but not really compared to how many people are unemployed in the economy. We still have record low unemployment, 3.7%. So as of right now, we're not technically in a recession, but based on these CPI numbers, I'm expecting the Federal Reserve to get very aggressive in their next meeting, which means that we're headed to a serious economic downturn. A word of advice for today. If you guys woke up and you saw all these aggressive candles, do not chase the markets. Chasing the markets is the easiest way to burn money. You're going to look at these trades and try to enter at the lows thinking it's going to continue. All of a sudden you get caught in a pullback and then the market stalls for a day. So wait for a pullback. Even if you don't get it later next week, you will. So I'm going to give you guys an example. The way I've split up my NASDAQ chart is weekly. These red lines represent the beginning and end of every week. So for example, we have these zones here, and let's say I'm looking for a specific retest at these previous lows. And so if you're rushing into the trade, you may get a bit of a push down this week, but then next week it's going to pull all the way back up and retest that same area that you were waiting for. And so if you're patient enough, you can catch these retests or potentially get an even better entry right here, and then catch a real swing trade. Chasing the markets, you're always going to be taking unnecessary risk with bad risk and reward. But if you're able to wait a little bit, you'll be able to find great opportunities. So don't chase. Lesson for today. UJ hasn't made any significant pullbacks, just been building on itself with these shorter time frame support and resistance. We talked about this 2 days ago. You're not going to get deep pullbacks on UJ, so shorter time frame trades. This is kind of how I'm scalping on the way up. The next one, hopefully tomorrow, we get a break of this structure. All right, so break of structure. If we get a break of this and we start to form higher floor, so 1 candle, 2 candle, 3 candle, 4 candle, 5 candles, these are all 4-hour candles that happened overnight. Perfect opportunity for re-entries. GJ has just completely busted through. So O was talking about this on his call yesterday. There's this previous area of structure. So when you guys look at a trend, the way that you can tell it's a downtrend, obviously, is you look at the highs, you look at the lows, look at the highs, you look at the lows. And as long as the highs and lows are getting lower, you know exactly what the trend is. You can define the trend and you can define the structure of the trend. And so this is the most recent area of structure before we had this massive drop. When the price came back to recover, we had a break of that structure. This break of structure is really what indicates that bulls have stepped back into the market and are willing to push price higher than the previous resistance levels before. So then upon this pullback, I was waiting a little bit here for a drop to the downside. This was the recovery that mattered. Again, previous area of structure here. When the market recovered, we had a break of that structure, which indicated that bulls were taking over. Personally, I was waiting for a deep pullback, which is why I didn't take this trade. Shallow pullback came in, massive bullish candle. Now that we're back up at these highs, I am expecting a bit of a pullback on GJ to come back down to a retracement level before we continue this aggressive trend. So I'm not looking to chase GJ, especially not at this resistance level. I'd much rather wait for it to pull back and around the area of 163. 163 is a pretty good zone for us to continue going long on GJ. Overall targets on GJ are in the 170, 172 and 174. UJ targets, 148.8 is my next target, and then 152. If you guys care about your account, you'll look to kind of scalp UJ on the way up to 152, which is my overall target for USD JPY. So no retest, no entry. That's going to be our theme for this call. We're about 13 minutes out from market open. As soon as the market opens, we'll see the whipsaw. We'll see if there's an opportunity for us to re-enter, if there's an aggressive move. If there's no opportunity for a retest, there may be something on the smaller timeframes, but at this point, guys, realistically, this is how this trade would be structured. If you enter at the low, this is the previous high. That's where your stop loss needs to be. So imagine we're doing some Fibonacci trading here. And the next extension level is down here at 10,100. This is a 0.6 risk and reward trade. Right? So even if you think the market's going to end up down here, this is still just a pretty risky trade. Now imagine if price can come back to the 61%. Now you have a 2.5 to 1 R&R trade. So it's not always about what do you think is going to happen, because even if this trade is, even if this market movement is valid, without a re-entry, the risk and reward won't make sense. Because imagine if this thing does retrace and you lose your money. Now it wasn't even worth the risk. So you're going to have to take trades that have a positive R&R, and that's why I'm not going to chase this and much rather wait for that 10,700 entry. Higher time frames for indices, just extremely bearish. Let's take a look at US 30 real quick. So here's the previous resistance levels. You guys can see here, whenever price wicks above but closes under, bearish. Wicks above but closes under, bearish. And then when it closes above, it's bullish. We've just wicked above. Now, granted that the candles haven't technically closed below the 28,500 support, but once it breaks through, then this thing is going to fit the same profile as these giant moves. And so then we look left and we see where are the next areas of supply and demand. I see 26,000 right here. Another potential level is 21,000. Now, do I think that we're going to retrace all the way down to 21,000 and come back to these COVID lows? I don't think we'll come back all the way to the COVID lows, but there's nothing stopping us from retracing anywhere between 50 to 70% of those lows. So let's kind of do a higher time frame analysis here. Here's the 60% down here. So we've probably pulled back about 40% so far. So this giant bull run that we've experienced from 2020 to 2021, based on all the printed money that we've seen, we've basically given back about 40% of all that wealth. And it doesn't look like we're stopping anytime soon. Granted, it's still pretty early in the month, but if this candlestick starts to close below, let's say like on the daily and the weekly, we manage to continue to close below the 28,000 key level, then we do have a lot of room to the downside, and we can give back a lot. We do have a lot more room to the downside, which I think that eventually we will. So still very bearish on indices. Do not chase. There's plenty of room to the downside. And if you end up chasing and you burn your account, you're going to be pretty upset, because when the high quality moves show up, you kind of wish that you would have a little bit more ammo to take advantage. So higher time frame, a lot of room to the downside. He says UJ is melting. Bro, just a retest. Just a retest. We're about 10 minutes out from the market open. Where's the DXY right here? Honestly, if anything, guys, this is a beautiful entry on UJ if it holds. I just want to see, where are we on the higher time frame? I think we're at, yeah, this is record high for UJs. No, I don't, it is risky trading up here, but I just don't see that USD JPY turning around anytime soon. We could have a pullback, of course. Everything pulls back, but in terms of the bigger picture, USD definitely going to keep going up, and JPY is definitely a useless currency. It's monopoly money at this point. This is what this trade would look like. I'll bite. I'll take the trade. I'm going to take this opportunity. It's a 3-to-1 R&R, 60 pip stop loss. Roughly, we're a bit of a ways away. So it's closer to 80 pips of risk. So make sure that you guys are risking accordingly. If you're using a micro lot size 0.01, that's $8 of risk. If you're using a 0.0, or if you're using a 0.1, that's going to be $80 of risk. And if you're using a standard lot size, that'll be about $800 of risk. The upside is a 3-to-1 risk and reward. So you'll be making, if you're risking $8, you'll be making 19 on the upside. If you're risking, if you're risking $80, you'll be making close to $200 on the upside. And if you're risking 800, you'll be making close to $2,000 on the upside. So make sure you guys are risking accordingly. This is a just a momentum trade where we have a previous area of structure, and this is the support. Price came down and cleared the support for everyone that had early buys. And now we're starting to close above this previous consolidation zone. We've already broken above the previous candlestick, indicating that there's bullish intent here. And we're in a very aggressively bullish market. So few good reasons to enter this trade. I know we're pretty high in the trend. And so there's that risk factor. But other than that, risk and reward makes sense. And the structure overall kind of supports that trade. So my stop loss 146.28. And then this is going to be a swing trade. So I am going to leave an open take profit here, but I'm going to shoot for 150 just to have something on my MT4. Yo, people on YouTube, let me know. Have you guys been dealing with this MetaTrader 4 being taken off the App Store? You guys still trading off your computer? You guys trading off your phones? How's everybody been doing with that situation? Just to kind of have a follow-up here. So the dollar is pushing aggressively bullish, and this is a very big reason why I'm looking for this UJ continuation trade. The dollar runs most of these pairs, right? Most global trade is settled in dollars. All oil is settled in dollars. 75% of goods and consumed goods is settled in dollars. So dollar is king. We have the DXY pumping bullish like this, regardless of what the Japanese index is doing. Kind of right now, it's doing a bit of a retracement here. UJ should continue to follow the dollar. So let's see if that's the case. I'm in that trade. 80 pip stop loss, 196 pip take profit. Another big factor, guys, we have the G20 meetings happening today. G20, top 20 leaders of the top global nations. They're going to be getting together mostly to discuss energy scarcity going into winter, this whole Russia and Ukraine crisis and the pressure it's put on supply chains. They're going to be talking about the state of monetary policy and how the US needs to slow down. So there's a lot of things that can come out of these meetings that can completely fuck up the markets. I'm telling you guys, use proper risk management for everything you're doing, because the G20 meetings are private and close to the press, but in between the finance meetings and the agriculture meetings, they're going to go out there and talk to reporters, kind of give a little bit of hints, and people are going to run with headlines. And headlines are going to push sentiment and change market conditions. So with this high volatility news, we have CPI today, obviously just came out, and then we have the G20 meetings happening, where the global discussion is going to be around energy scarcity and some of these other, very important things. Make sure that you guys are using proper risk management in everything you're doing. So again, pretty straightforward, about 3 minutes out from market open. The three trades I'm looking for: Euro USD, 0.97 re-entries. See if we get a re-entry at this zone. Price is still creating lower highs. We broke this previous area of structure, but we haven't managed to really close below, which is a big deal. But as long as we create another lower high, we're going to get the swing trade. And I promise you guys, once this thing drops for about 170 pips, it's not going to make a ton of retests in this zone. So if we don't get in around this area, chances are we won't have a lot of opportunity to enter this EU continuation. So it's going to be one of our only chances here, 0.97. And if it doesn't happen this week, if it stalls, then we still have plenty of room next week. NASDAQ, do I believe we can get a pullback at the market open? I don't. Honestly, I can see us stalling here and just sort of consolidating. But without a retest, there's no entry. So not genuinely looking at NASDAQ for any trades. UJ just graduated up in the watch list. And as long as this 4-hour candlestick holds, then we should continue to build to the upside and be in profit on this trade. Market open, extremely volatile. We have 1 minute to go. So we are going to expect a lot of like whipsaw movement. Don't panic at the market open, especially if you're involved in trades, but make sure that you guys are protected if you want to be, and make sure that you guys have risked yourselves accordingly. If you're in too deep, you got about a minute to make a good decision here and kind of reduce your risk exposure so you're a little bit more comfortable. Do you look at the dollar every day when you first jump on the charts to help predict the market? Not predict, but to help give me a sense of direction. The dollar is extremely bullish. And so I'm not even checking for anything other than, is it still going up? Yep. Okay, good. And if it's still going up, the only thing I'm doing is I'm shorting EU and I'm going long on UJ. And I've been doing this the entire year since January, and it's been incredible for me. NASDAQ has been a little bit more volatile because it's a high risk asset. When you guys look at a currency like the Great British Pound or the dollar, these are not like currencies are not high risk assets. They're more stable. NASDAQ has a lot more volatility because people were betting on this thing for the past basically 8 years, making crazy bets, saying Tesla is going to become a multi-trillion-dollar company and Google, is going to become a $5 trillion company, and the valuations got out of hand. Right now, everybody needs cash. By everybody, I mean the largest institutions that run the markets. And so the first things that institutions do is they reduce their risk exposure on the highest risk assets, that being crypto, that being stocks, and that being some of those other, volatile investments. So that's what we're seeing now. We had a great conversation about this on the last stream about sentiment. The markets are either risk on or risk off. When the markets are risk off, they don't want to buy these high risk assets. Everybody's dumping stocks, they're dumping crypto. So right now the sentiment is risk off because of the inflation news. At some point, when the Fed changes their mind, we're going to be on a risk on sentiment, and the institution's risk appetite is going to be there to start buying stocks. And that's where the dip is going to be. So dollar, very important. All right. I don't trade right at the market open. You guys know this. So we're going to hang out here basically 20, 30 minutes, allow the market to play out, and then we'll find a direction. If one of the other educators is on here, do you guys want to take over the charts real quick?
What's up, bro? You mind repeating that?
Yeah, my guy, do you want to take over the charts real quick? Show the folks what you're looking at.
Yeah, I gotcha.
All right, ladies and gentlemen, that voice that you are hearing right now is Professor O. Omer Kambal, co-founder, Chart Addicts, Mr. 100% win rate. He just called a lot of great trades on the Enigma app yesterday and the day before, and everybody woke up in profits. So very excited to see what he's looking at. Show some love in the chats for Professor O. If you guys saw that video, my bad. Oh, I just want to give you a good introduction here. You guys saw that video on YouTube with the vacation paid 100% signals, 100% win rate. That video. This is the man, the myth, the legend. All right, show some love in the chats real quick. And if you guys are in Enigma and you're making money on these trades, let me see it in the chat right now. Who's in profit on ECAD right now? My bad. Oh, you got it.
You're good, man. I appreciate the love. Hope everyone is having an amazing day, morning, evening, night, wherever you guys are. So the pairs that I'm looking at, obviously, this EuroCAD and Euro Swiss ended up playing in our favor. I'm looking for re-entries off this EuroCAD setup. I'm seeing some nice candle confirmations on the 3-hour time frame. So if you ended up missing this move, or if you're looking to get into it, if price comes back to this zone, I'm seeing another opportunity to get in. I believe price is hovering around 85 pips right now. The reason I'm liking this area here, because you guys see we managed to break down below, but for some reason we couldn't hold below this zone. Looks like buyers came back in and pushed price right above. So if we can get that pullback, just so we can get our stop loss below this wick here, I can see this move playing out to our first target. I believe it's 150 pips, and our second target, which is about 290 pips. All right. Other than that, I think one pair that's sticking out to me is this NZD CAD setup. If you guys remember, we did end up calling a sell limit on it on around the 11-hour candle, this 11-hour time frame here. Unfortunately, we missed the move, but I'm seeing this re-entry opportunity if we manage to close like this off of the 10-hour or the 11-hour time frame. So overall bearish, so we want to be looking for sells. If we want to sell, we want to sell at resistance, and we're getting some clean candle confirmation here. All right, huge wick action again. Buyers pushed it up, then sellers came back in, pushed it right back down. And if we hold below this zone, and I would like to actually see this body get filled, all right, before we end up taking this trade. So if it ends up closing weak, I'm just gonna forget about this trade. But if we end up coming down a little bit and closing a little bit stronger, all right, I'll wait for that next candle just to pull back a little bit, just so we can decrease that stop loss, all right, and increase our risk to reward. So this would be my final target. If we break this area and continue, that's good signs to hold. So we'll see what happens. Right now, it's saying in about 3 hours, this candle's gonna close. So I'll usually set an alarm, go about my day, and come back to see what happens. Other than that, yeah, if you hopped on yesterday's call, the recording is posted. We went over a lot of pairs. I think the pound pairs give us a lot of confirmation. So if you took any of those pound pairs, they ended up playing out just like we said. All right. Pound CAD, pound Swiss, GJ, pound NZD, literally all of them ended up playing out. All right. Other than that, do you guys have any questions about what we went over so far? Took both trades. Yeah, I took both trades too.
Keeping it simple, my man. Love to see it.
Yeah, Euro Swiss. Let's go ahead and go over Euro Swiss. So Euro Swiss also in profits. So if the candles close strong like this, that gives us a high indication that it's going to push up a little bit further. I think this trade was actually called off of the 9 hour. So in 1 hour and 24 minutes, if this candle engulfs all of these candles, all right, it's again another high indication that we can hold this trade to our first target. And depending on what happens here, I'm seeing our second target being hit. All right, so it takes some time for these moves to play out. So I know a lot of you guys ask me, are these swing positions? It honestly depends on the market, because the move can honestly happen in maybe a few hours or a day. So it all depends. Other than that, I was honestly looking for some gold sells. Unfortunately, the move happened a lot faster than I anticipated. I was seeing some nice candle confirmation, this shift double top, but looks like it ended up just dropping. So let's see if we get a pullback around this area here. Especially if we close bearish like this, literally we engulfed almost every candle beforehand. So to me, it looks like bears are back in this market. So if we can get a pullback, because we want to sell high, we don't want to be selling down here. All right, just so we can decrease that risk, maybe put our stop loss above the previous swing. I'm seeing this push down to maybe 1620. I know a lot of the CAD pairs were kind of resonating the most to me, so I think I'm just going to stick to NZD CAD, see what happens. And I think that's pretty much it for me. So I think, Bianca, were you the one that went over or asked for AJ yesterday? If he's still on this call. So that sell-off to 61 ended up playing out lovely. So we were looking for price to hold right around 9.2. We drew a fib from this swing here. We were testing that 61. So if you ended up taking that, I think that was Jay. Okay, I'm sorry about that, Bianca. So yeah, whoever was looking at AJ, again, another trade that ended up playing out. So you guys, I know you might be asking, do I really trade or look at all these pairs? I usually just scroll through to see which ones are resonating the most to me, and I'll just move those to the top. I'll highlight them based on how juicy they're looking, and I'll narrow down to the best looking one just based off the structure, the candle confirmations, and how clean the move is looking. So obviously, I would say I'm a bit more experienced, but if you guys are just starting out, I would just say focus on a few pairs just so you can get that eye for it. All right, if Keegan was on this call, I think we were looking on at this UJ potential buy opportunity. So I was honestly anticipating it to come down a little bit lower to touch this 61 fib. Looks like we were a few pips shy. So that was a third touch off the trend line. I think we had a 61 fib pullback. And I think we were all looking at this on the 30-minute time frame. All right, so trend is obviously bullish. We were looking for buys. If we want to buy, we want to buy low. And we were looking at two areas. We were looking at this 30-minute zone, and then we had this hourly zone. We had this trend line marked up, and we were looking for price to come tap this area for potential longs. Looks like it barely tapped it and ended up just taking off right after. So other than that, I think that's pretty much it for me, Roy. Re-entries off EuroCAD, and I'll be looking for sells off NZD-CAD. So like Roy said, if you guys are on the Enigma app, I will be looking to call this trade just like all the other trades I call.
Done dilly. That's how it's done. Yo, show some love, guys. This is how you keep it simple. This is the definition of keeping it simple. This is the definition of not overcomplicating your trading. This is the definition of quality over quantity. It's a definition of discipline and patience. So, by the way, this US 30 is exactly what we talked about. Who remembers me talking about this double top rejection here of 29,600? We talked about 29,600 on the Sunday stream. We talked about it on Monday, and we talked about it on Tuesday. But show some love to O, keeping it simple. Oh, I appreciate you breaking those down. And
no, of course. Yeah, let me know if you guys have any questions. Feel free to DM me if you guys are looking at any pairs or have any questions regarding the pairs that we ended up taking.
Yeah, bro. Eurochef from entry. So you got 61 pips overnight, but right now it's still floating about 43 pips. So this thing is still headed in the right direction. It's looking really good, filling this previous candle. So as long as this momentum continues and it fills this candlestick, if we break above this area of structure, we got this whole zone right here to fill up to 0.98. So ladies and gentlemen, if you guys are watching this on YouTube, you guys are watching this anywhere, this stream is sponsored by Enigma FX, enigmafx.app. Go ahead and start your 30-day free trial to get signals like the ones that we just covered today. So if you guys have any questions, you can reach out to us after this, but enigmafx.app, pretty self-explanatory. If you're looking to learn from myself and from Omer on how to trade and how to level up your game, you can either get coaching from us, or you can come through and become a Chart Addicts member and get access to these daily trading streams. So you can get around traders to break down these markets and to show you how we look at charts and how we look to enter these trades. So chartaddictsfx.com if you're looking to learn how to trade. And if you're looking for signals, 30-day free trial, enigmafx.app. Last but not least, this stream is brought to you by TradingView. Partners with TradingView, the #1 charting platform in the world for traders. Use the link below if you guys are interested in getting a pro account with TradingView. All right, so Euro USD, nothing's changed materially since the market opened. New York, not usually a heavy mover for Euro USD anyways, but again, still looking for that pullback, 0.97. That's still running. NASDAQ, relatively unchanged since the market opened, a whole lot of sideways motion. And I told you guys this is to be expected, but I am seeing a bit of a pullback during this session. Once we have this massive drop, a lot of people are looking to enter here. And so the anticipation of when's the next drop, people are looking to rush into these smaller time frame trades. If you look at the 5-minute, for example, how many people are looking to buy and sell in this area? Every time it forms support and it forms a green candle, people are buying. Every time it snaps back down, people are going to be selling. By people, I mean new traders who make the majority of these mistakes. And so it's just going to consolidate here to trap liquidity, to make people start to guess random directions. And then it may spike in both directions to kick everybody out before making a full pullback. So the smartest thing to do is to head up to the higher timeframes and to wait for something material to change on the charts. Material means like, yes, all that 5-minute, there's been a bunch of up and down, but like when you look at the 4-hour, it's literally at the same price still sitting right below our extension. Nothing materially has changed. All right, let me hide the user on this channel. Can you please do a quick analysis of USD CHF? I'll do that in just a second. He said, that is lit, my bro. Really, Professor O, we in profit right now. All right, good stuff. Why do you have that target for UJ? And how do you know the dollar news will impact non-USD pairs? That's a bit of a tough question. It's going to be like, third and fourth order consequences of these actions. We're gonna have to explain that later. How can you predict the dollar news will impact other pairs? Trading on the phone will probably make you lose. Yeah, you do have a much better chance of being successful if you trade off the computer. That's just statistically real. When I was kind of like, when the MT4 news broke, you guys know I'm pretty well connected in the trading space. I called folks that work at brokerages. I called folks that work at institutions. I called folks that worked at Apple. I called folks that worked inside of MetaTrader or that have partnerships with MetaTrader. We're getting the news in real time. And the brokers were telling me that we all had the same conversation. You are, I think it was like 40% more likely to be successful trading off of your computer and taking it serious as if it was like a desk job versus gamifying it and trading on your phone. And so that statistic kind of shocked me. I was like, you're telling me there's that big of a difference? And the answer is, we've associated our phones with a lot of short-term gratification, right? So dopamine hits. You get on your social media, for example, every time you refresh, there's a new thing. Every time that you go on Twitter, you refresh, there's a new thing. There's constant stimulus. So you've associated your phone with short-term gratification. Trading is a long-term gratification game. You plant the seed, you enter the trade, then you have to wait for the tree to sprout. So you can't really just sit there and watch the grass grow. Obviously, if you're a scalper, it's different. It's an opportunity thing. But when you're looking at like what the phone does to our psychology, when you're trading off the MT4 app, you're kind of gamifying it by design. They have the red and the green colors, which are naturally mentally stimulating. You have all the constant movement. So you have the bid and the ask constantly moving. And if you go to your quotes page, just like right here, you guys see how these numbers are constantly moving? It's the illusion of movement. So when you look right here, you can see that like, oh my God, the markets are moving. Like, there's a lot of action going on. You look at the price materially, again, nothing has changed about the price, right? And so these apps try to gamify trading in order to stimulate activity because that's how people stay on the apps. But if you're doing it off the computer, it's usually a lot less stimulating because the colors are a little bit more bland. MT4 on the desktop is not visually appealing. And so you're probably just going to treat it a bit more mechanically, which is what you should be doing with your trading. I see a lot of people, we change the color gradients and the color palettes on the phone because for me, for example, I have these blue and white candles. I don't know if you guys can see this, the blue and the white candles, because red and green, for me, every time I was seeing red candles, it would indicate something negative. Every time I saw green candles, it indicates something positive. And for me, it was just kind of like, I have a natural association with these colors. For example, I'm looking at this toolbar here for Zoom, how I'm doing this call. The UR screen sharing is in green. So it's a positive sign. It's a positive reinforcement. And then the red one is stop sharing. Stop meaning stop what you're doing and, hesitate and all this other nonsense. We have a natural association with these colors because traffic lights and traffic stop, everything is based off of these color associations. And so that's what the app really tries to do, to give you guys a kind of an insight. Imagine if you looked at these and they were black and white. It would technically be the same because you're really just trading price changes, not necessarily the color changes. Keep that in mind. If you guys ever feel yourself getting too stimulated with trading, see if changing up the color palettes will help you look at things a bit more mechanically, and also trading on your computer might give you a better advantage at taking trading a bit more serious rather than gamifying it. They say NAS buy. There are, honestly, if I was going to scalp this, the NAS buys are the move because we did form this shorter time frame support here. And it would be like a scalp up to this retest area, 10,700, and then we can short it back down. But I do see a buy opportunity right now if anybody wants to take it. Personally, I ain't betting against the market momentum like this. I don't care how juicy the smaller time frame trade is. I'm not betting against this momentum. The opportunity is there. If you're a scalper, you guys understand the risk here. Your risk profile for this. Two and a half to one R&R. Even if you entered up here at the top of this candle, 2.5 to 1 R&R, 220 points to the upside, about 87 points of risk to the downside. So if you're a scalper, you guys want to take this opportunity, it's right here. Personally, you guys know I'm looking for these higher time frame trades, so I'm going to wait for the shorting opportunities on the retest. There it is. Getting a bit of a pop off here on the NASDAQ trade. So this should continue to build on itself. I would look to take partial profits at this first level at 10,600, and then put your stop loss and break even as soon as it reaches, or as soon as it breaks this level, and then hold the rest of the position until 10,700. All right. Let me know in the chats if anyone took that trade. And yes, we are getting a pretty nice pullback here on Euro USD. I don't like how we held this support. If you guys know where this zone is coming from, like this line right here, it's a monthly support level. We haven't been at these lows for a long time on Euro USD. And so I had to go back all the way to 2001, 2002 to figure out where the support is. The level that we're at on Euro USD currently right now is this level where all these wicks are. Now, I need you guys to understand something. If we break this level, we have a shit ton of room to the downside to continue dropping, which is what I believe is going to happen. And so right now we're sort of sitting at this area where price could wick up and wick up and wick up, because when institutions are looking at Euro USD, they're using historical data at this point. They're looking back in time and they're going, okay, where's the next anchor that we can actually point to say this is a fair value zone? This is a fair area for us to start buying. And if the only anchor you have is 2002, and that's these floors, you're going to invite a lot of buyers to start early buying at that level. So we're seeing a bit of consolidation where we're currently at, because we're at a higher time frame zone. However, because the market is aggressively bearish, and I believe that we can continue the bearish trend, that's why I'm looking to keep shorting, despite the fact that we are at a higher time frame buy zone. So the reason we can't break this is because this little hairline that I drew here is that higher time frame buy level. However, we did manage to already create lower highs, and we did break this previous structure. And so I'm kind of betting on this continuation. I want price to kind of push up a little bit more, continue this head and shoulders up here, and then 0.97, we're going to short this thing to the downside. So Euro USD still building on itself. NASDAQ up about 50 points. Anyone take the NASDAQ trade? Let me check this chat real quick. Did anyone take the NASDAQ trade? He said crazy retrace on EU. That's what we do. That's what we do. That's what we do. That's what we do. Erica says I'm in a NAS buy. I took US 30 buys at 28,700. Good stuff. I'm pretty sure Austin and Jordan are in the chats right now going crazy. Yeah, they are. We got all of our Chart Addicts team, our Chart Addicts educators and coaches, always crushing it. $3,700 of profit on the funded account, trading the US 30 buys back up. Doobie, if you're on this, but I just want to say I'm really proud of you. I've been seeing you call these retracements this entire week. We've had the same zones all week. Very proud of you for kind of sticking to these. And I just want to see you keep doing this. Like these before and afters, very encouraging for me to see that you're making that progress. So Doobie, if you're on this call, bro, I'm proud of you. Naz, hold it at this point if you guys are in that long. Euro USD is going to take a second. So we're literally only 20 minutes out from the market open. UJ is kind of getting stuck here. What's the DXY doing? DXY having a bit of trouble breaking this resistance. However, I'm very confident that we'll be able to break through, because yes, we reached this previous area of resistance on the dollar. The dollar is what I use to trade UJ. Dollar is what I use to trade EU. The dollar is what I use to kind of gauge how much volume we're going to have on stocks. Very important to look at the DXY. This is not just the dollar, but it's the dollar currency index. It tracks the dollar versus a basket of global currencies. How's the dollar doing against everybody else in the world? So far we've been crushing it. We had a big ass retracement not too long ago. And now we kind of back up at this previous area of resistance right here. So we formed a bunch of resistance, and then we had this higher low form. And then this morning, we kind of had a whipsaw to both sides, but we're still forming higher lows. And so in my opinion, because we're continuing to form these higher lows, we're going to get a push to the upside. We're going to break and retest this level at 113, and we're going to continue heading up to the 114 level, and then eventually the 120 level. And so if I'm expecting the DXY to eventually break out to continue bullish, UJ should be doing the same. Is it going to happen right now? No, it's a currency pair, and we're going to have to wait for the market to sort of finish doing its thing. All right. I am buying call positions. I sold at 10,900. Definitely not going against the market, but if there's a head and shoulders on the DXY sideways 2-hour chart, yeah, I do see that. Oh, mic check, mic check. I think I might have dropped off for a second. Sorry, y'all. Excuse me. Yeah, I mean, guys, it's a risky trade whenever you're trading this high in a market. However, what I was explaining is whenever you have a bullish push and you're continuing to make higher lows, most likely you're going to get a push up. Is it immediately? Are we going to immediately see that push to the upside? No, we're going to have to wait for this market to fully develop. And I think that that's the important thing, is that these trades take time. And unless the market breaks these lows, the trade is still valid. All right, so it can still play in this range here. I'll kind of extend this range just in case. But just know that as soon as we break out of this range, Euro USD is going to fall, and then USD JPY we're going to have some action for sure. So we'll be patient with this. Continue to hold. NASDAQ still pushing, just kind of doing its thing, smaller time frame. UJ retracing a bit. So let's kind of look at where are the potential re-entries for UJ if we want to enter another position. Here's the 61% fib, which kind of lies right at the top of this consolidation. And then let's do the 70% fib, which is the only levels I really need on UJ. These are my favorite levels: the 38, the 61, and the 78. Everything else in here is a bit of noise. All right. The 61 and the 78, these are retracement levels. So it can come down here and wick and then close back above. The 38 is when you confirm that the market is about to break the highs. So for example, if the market starts to break above the 38 fib and it starts to form a new floor, even if it's making a double top, or it looks like it's making a double top, if it's continuing to form this floor at the 38, this is going to be an indication that's going to go to new highs. And so that's why I keep those specific levels on my fibs. The 61 is going to be a good re-entry zone. Maybe it wicks down a little bit, closes back above, and forms new highs. But as soon as we break the 38 and form a new floor, that's when we know that we're in the money. That's where I move my stops to break even. That's where I do a lot of these, a lot of those things where I kind of protect the trade and do some risk management and trade management kind of procedures. Yo, can I get somebody to moderate the YouTube? Somebody on the Chart Addicts team. This person is spamming these chats with this, like, all this stuff. Should I carry on holding my NAS sell from the top? Lungello says I sold at 10,900. Bro, why the fuck would you close that? Yes. Hold it. Now, this depends. Are you only holding a micro, or do you have any room to close? Because you've already had, let's call it a 470 point drop. And so I would definitely pull partial profits on this, because this is a significant move. It's a significant candle, and you don't want to miss an opportunity to take money out of the markets when you have such an incredible entry and you have had such a volatile move. And so I would definitely take something off the table. Now, do I believe the market can continue lower and then you have such a good entry that if you just put your stop loss and break even, you can keep holding the rest of your position? I believe that, which is why I'm telling you to close partials of your position, but to leave the rest of it running. Okay, you don't want to miss out on the rest of this opportunity. But dude, 470 points. If you're not taking partial profits, I don't know what to tell you. If you lose it all, then that's kind of your fault, right? If it does retrace and kind of come back up here, if you ever take partial profits, you're never upset, okay? Because you've at least walked away with something and you caught a great entry and you capitalized and you made a good decision. But thank God I closed partial profits, because like, imagine I just held the whole thing. Now I understand some people feel a kind of way about taking partials and about not taking partials. I'll be real with you guys. If you have a high win rate, then you do want to take partial profits, because more than likely you're going to keep winning. All right. If you lose a couple of trades, it's okay. You don't need the highest risk and reward in the world. Now, if you have a low win rate, then maybe we should talk about holding these trades. So, Gelo, hope that answered your question, my man. Hope that answered your question. So I closed 3 positions. Good stuff. You simplifying Forex. Thank you so much. That's the goal. This is what Chart Addicts stands for. Chart Addicts stands for, we look around all the time, and kind of we started this in 2018. We look around, people always making shit so complicated so they can sell stuff. If we keep it simple, you guys can make more money. And if you guys make more money, we have a better community. I want to be around people that are winning. Winning is contagious. And so Chart Addicts is a community to get around traders who are winning, to get around people of all different skill levels. So you have us, the coaches and the educators, who are already successful in our trading and are leveling up in our trading every month, every year. And then you have folks that are getting a hang of trading and sort of just started seeing success. You have people around you that are still learning. It's an incredible environment for people of all skill levels, because you can always ask up, you can ask around, and having that resource is, I think, invaluable. Most people don't have an accountability partner. Most people don't have someone that they can actually just talk about trading with or really obsess over trading with. And so Chart Addicts is that kind of community. I'm glad that you're saying that we keep it simple. That is our number one priority. Close that trade if you need more than 400 points. If you need to do bigger lot size. He says, close that trade if you need more than 400 points. You need a bigger lot size. Anthony, I don't think that logic makes any sense. When you catch a great entry and it's in the direction of the trend, it's not about like, bro, isn't 400 points enough for you? Like, isn't it enough? Dude, this trade could keep running for 1,600 points, for 2,500 points. And so this is why we say take partial profits, because it's so significant that, yes, taking something off of 400 points is going to do you wonders. But does this thing have the potential to literally keep running? And does he have a great entry? Yes. And so that's the difference between a low probability entry and a high probability trade. If you have, a low probability trade and a high probability trade, the high probability trades, higher time frame, in the direction of the trend, off of a key level that's a daily or 4-hour zone. When you get a great entry there, you kind of want to hold those trades. Those ones could do wonders for you, right? You get a 1 to 10 R&R off that trade. It just made up for 8 of those losers that you were stressing about that month. You see what I'm saying? And so you kind of have to gauge the quality of the trade that you have. NASDAQ is extremely bearish. CPI just came out high. The Fed's about to crash these markets. If I'm gonna short from up here on NASDAQ, I'll be holding that thing. I'm still in shorts on EU. I'm still holding runners, by the way, from these signals. I'm still holding these 2 trades from 1.004 and from 0.995. I'm holding a runner. You guys can see this. And now I'm looking to enter one more time to get this third entry to keep dropping the market. But you can see the place where I take profit. This is where I took my partials. This is where I was like, okay, 200 pips, 300 pips, that is enough for me. Let me take partial profits off of this, but let me leave something running. Let me leave 20% of my trade running. Let me leave a small percentage of my trade running. So this is how we're looking. Those top 2 trades are the Euro USD runners. All right, I have a pretty shitty Euro USD entry from this morning. Kind of ignore that for a second. I'm looking to hedge myself out of that trade here shortly. And then the very, very bottom one is UJ. That's the UJ trade that we took earlier. It's basically just sitting right at break even. And so we're kind of just holding those. Those are the 4 trades I'm in right now. Kind of just holding those and waiting for this EU re-entry opportunity. So we're sitting at the 50% retracement right now. I just want to see it pull up a little bit higher. Granted, the difference between these is like 3 pips. There's like a 3 pips of difference. it's still a 3.5 to 1 R&R. Like, I don't know if like penny pinching 3 pips is going to make the difference. Actually, yeah, it does. So entering right now at the 50 is a 3.5 R&R. Waiting for the 61 is a 4.5 R&R. Very big difference. You're risking $1,000. It's the difference between making 3,500 and the difference between making 4,500 on this trade. So you guys tell me if that's worth it. That sounds worth it to me. Look to scale into this trade. All right. And if you guys don't really, if you're using like pretty decent lot sizes, it's not really going to make that much of a difference. What you can do is you can start to scale in. So you can enter a small position at the, let's say you want to enter like a 0.5. What you'll do is you'll enter a 0.1 right here. You'll enter a 0.2 right here. And then if it pushes up and comes back in, you'll enter another 0.2 on the retest. So you can kind of split up your position. That way, if you go into any drawdown, you're not holding the full trade and full drawdown, kind of eating up that loss, or just kind of just sitting in hella reds. So scaling in, a great opportunity here, which I think I might do. That's what I'm going to do for this trade, guys, for this Euro USD. I'm going to enter one position here, and then I'm going to enter another position if we go into a deeper retest, which would be around the 0.97, like I said before. Let me wait for this. Let me wait for this smaller time frame rejection. Give me 1 second here. If this thing just starts to form a bullish candle, then no use in entering the trade right then and there. Kind of being a little bit more patient for it to push up. Who's still holding the NASDAQ buys? Is anybody still in these NASDAQ buys? So you basically just reached a 1-to-1 R&R. This is the place where I would look to take partial profits, and I would look to protect this trade if I were you. All right, so just a reminder, I'm not in this trade, but we did call this earlier. If you guys are in this NASDAQ 100 trade, I do believe it can keep pushing. And guys, we could even break these highs. We can even break these highs today just to kind of fake out a lot of the late sellers, that keep trying to short at some of these levels. And so this thing has a lot of potential, but take partial profits along the way and make sure that you guys are protecting the trade and break even, because the trend is still bearish and the momentum is bearish. So we are kind of doing something risky here, trading against the momentum. However, we have a lot of room to the upside. So, make sure you're holding some piece of that position. Let me know in the chats who's still holding that trade. UJ sitting above the 38% fib. This is exactly what we wanted. This is exactly what we talked about. And we're still forming these higher lows. So let's see if we continue to build on itself. And that UJ trade that we took earlier will hopefully be in profit. All right, we had a minor rejection, so I am going to start to scale into Euro USD. So I'm going to start to enter positions here. Do not enter a full position size. Again, this is something where you split the positions. You put the smallest entry at the bottom, and then you go a bit larger with this entry. And then if you get a bit of a deeper retracement here, you can go even larger with that entry. That doesn't mean that you're entering 3 trades, like 3 trades worth of risk. It's the same risk you would use on one trade, split up 3 ways. All right. The reason I do this is because if the market does just drop out of the sky and I don't get a retest, I'm at least involved in this trade and I have running equity. When I have running equity, I can always use that to open new trades in the trend. And so that makes me feel good. So the first entry was up here at the 50 fib, and then stop loss above the highs. Also headcount. Let me know who's in the USD JPY trade. So who's in Euro USD, who's in the USD JPY trade, and then who's in the NASDAQ longs. Carlos Santa said, I love CA. I've been trading for a year and I've experienced nothing like CA. I'm here for life as y'all continue to grow. Carlos, I appreciate that, brother. Looking to have you with us for the long term. Can you check out US 30? Is it ready to continue selling? Let's do that in just a second here. I think that was a few minutes ago. I dropped my chart analysis. I'm already in. Keegan said I'm in UJ and EU. Good stuff. Bianca said I'm in UJ. All right. Sarah said she's in UJ. Good stuff. Let me see YouTube here. Lungelo said, first time on your YouTube live. Definitely helped me. Stay blessed, bro. All right, good stuff, fam. 1M said, still holding. Good shit. Erica said, took partials. Proud of you, Erica. That's what we got to do. In brick profits. Thank you. Love to see that. I'm in that UJ. LOL. Good stuff. 1M said, I'm in Nas longs. Addict Trader FX. That unoriginal last name, boy. In all three trades with you. All right. I'm in EU and UJ. Bada boom, bada bing. All right, y'all. So those are the trades. We're already in. We're locked in. No reason to stay on here throughout the whole session. You guys can monitor these trades yourself. Euro USD, as it continues to retrace, unless it closes above this area of structure. So let's say the 0.973, the trade is still valid. If it closes above 0.973 and starts to build, obviously you want to jump out these trades and you don't want to expose your account to any more risk than you need to. So that's kind of like your warning sign. The NASDAQ folks, keep holding this thing. Honestly, am I going to be looking for shorts in this session? Pretty risky, but I'm going to send out a markup right after this and I'll let you guys know. USD JPY, this is the one that's looking the most beautiful right now. We already had a retest above the 38, 2 candles close above the 38, and now we're building. UJ, very happy about this trade. And Euro CHF, if you guys are in from the app, from the Enigma app, then you should be in profit. 9681. We're running about 55 pips on the Euro CHF and about even more on the Euro CAD. So shout out to Professor O calling those trades. Again, if you guys want access to a 30-day free trial for signals, enigmafx.app, all the same trades in the same style that we just showed, we trade on this app and those trades get called. If you guys are looking to trade for yourself, which is, I think, the best for everybody, you should learn how to do the skill set for yourself so no one can take it away from you. chartaddictsfx.com. You can become a member for as little as $59 a month and come get access to daily trading calls such as this. You guys can also get access to personal coaching to go through your individual struggles if you've been trading for a few years and are looking to get over a certain hump. All right. We look forward to working with you guys. Again, my name is Roy Dunya, co-founder, Chart Addicts. Another incredible live trading stream. We'll catch you guys later. Peace.